The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this very first day of August 2017. My pleasure to be here. All-time high in the Dow at 21,976 right now. Went to 21,988. Just, 10, 12 points off that. At this particular moment, we'll talk about all of this in a second. Let's just run the numbers so we can get it out the way, then we can start fresh. We're looking at the E-mini up only 4.25, up 0.17%. The S&P is up 0.20%. The Dow's up 0.39%. There's a divergence going on here. We'll talk about that because it's really important to look at what is working, what is not working, and what should be working that isn't. Okay. So the E-mini made a peak D in the Chapman wave methodology at 2480.50 a few days ago. That was with the MACD strong. Now the MACD is weaker. It hasn't crossed negative yet. And the stochastic is still positive at 84%, but way off the 96% level that it was just a week ago. I've got this as a leg E in the weekly chart. And what's really important about this is, at least for the E-mini, the candle that was formed. Let me just move this away. I'd like you to be able to see it on Tiger TV. So the candle that was formed right there last week with a high of 2480.50 and a low of 2457 round number in the E-mini. That gives us the parameters. A close above the high of last week is very good action. A close below the low of last week is starting to show weak action, with the 9-period moving average of 2445 becoming a target. Now let's move on. Now we can go. Dow, INDU. The Dow right now, leg D in the weekly chart. I forgot to do this. Let me just go back here for the 120-minute chart. I'm pretty sure I'm going to call this a peak F if the MACD crosses negative in the next 120-minute candle. The stochastic's gone down to 64%. Everything about it suggests that the E-mini has made its high for the day and that it should be going down from here, from the 2477.25 high. And if I look at the 10-minute chart right there, you'll see that we made a peak D at 5 o'clock this morning. Exactly 5 o'clock this morning, up at the 2477.25 area. And we're now starting to fail with lower lows and lower highs. Very, very important day. Was this a day where you looked at the market and you said, why didn't I just continue to hold the long positions? Why didn't I grab the long position last week? Am I crazy? Why would I even want to be thinking short? That's the exact moment that says, watch out, rug pull could be coming. Okay, we'll see. So E-mini weekly chart, I've discussed the MACD. You know, it's very interesting. The MACD has gone 49. The MACD hasn't yet crossed. Wow, it still has not crossed positive in the weekly chart. All right, let's get back. So now we can do the Dow, because I'd forgotten the 120-minute chart. And we've got, let me move this away, because my thinking here, and I'll go to that if we've got time, I want to show some very interesting chart patterns. Believe me, for my webinar tomorrow night, it's not how much material that I've got, it's how much I've got to take away, because there are so many divergences. Even this moment that I'm talking to you right now, there's a divergence between the Dow being led by just a couple of stocks to the upside. That is really unusual. In fact, I don't recollect. I'm sure there must have been one time. It's just not popping out of my head. And usually I have a good memory for this because it's work I do every single day. I don't remember where I had my Dow quartet, GE, IBM, Triple M, and UTX failing miserably with the Dow going to all-time highs. At least one of them was doing very well. None of them are doing well at this particular point. That is not, when your generals are not leading, you can't have the troops lead. You've got to have the generals lead. And it's getting closer and closer to us being on a very thin limb on a branch for at least some kind of a digestive formation coming up. All right. So now the Dow's got leg D. We're looking at this candle. If it stopped right here, it would be a doji candle, but it hasn't stopped. We're only not even 2 hours into the day of the first trading day of August. So let's just leave this alone and say the MACD is very strong. Stochastic's very strong at 96%. It is going to be a combination. If we are going to get a pullback here, well, I'm going to be discussing this in my webinar tomorrow night. I'm going to be discussing 20,000, 21,000, and 22,000. At each millennial level, what are the implications? What has happened, and what do I expect at this 22,000 level? My subscribers know. Most importantly, what about the divergences? What about even within the Dow, instead of coming down, you've got a Boeing and a Chevron suddenly in the last few days pushing the Dow up in a solitaire moment. Can that last? Well, I'm making it real clear. This I will say. A close decisively above 22,020 will be a really astonishing thing. And I would have to say, you know what? Returning the 21,900s into support, because we're going to be pushing into the 22,000s. I think that's going to have to wait. Meantime, back at the ranch, parameters are easy. Up in the 22,000, above 22,020s, that's really good action. Below, of course, there's a gap. There are two gaps. There are actually three gaps that are in the. You go back and try to find three gaps in the Dow. This is the one from the 24th of July. Try and find three gaps in a row. It's going to be real tough to do. Or at least one, if not two, of the gaps will be filled within 2 weeks. That's my thinking. So we're at 21,959. Make it real simple. A close at any point in the next 3 days below 21,766 will be the first close below the 9-period moving average in about 8 or 9 sessions, and that'll be a hint to say that the weekly chart could start to deteriorate technically. Here we go. S&P, SPX.X. Let me just get these done before the break. S&P failing. It's up 2.50 at 24.72. The high of 24.84 at peak D. I'm going to be watching this real closely by the end of the day. Let's see what happens. But a close below 24.65 essentially starts the downside short-term move for the S&P. And that candle last week, long-legged doji candle, says a close below 2459.93 is very negative. The close on the upside above 2484.04, I would have to say, is very positive. Parameters are real clear. Let's go to the QQQ. QQQ right now, failure pattern to peak C. 145.96 on the 27th, never got the leg D, could still do it, but boy, it's going to take quite an effort to do. Only up 18 cents, peak G/C in the weekly chart, leg C in the monthly, and this is looking out, still very positive, but we could have a pretty good pullback coming up over the coming weeks. QQQ, let's go to, I'd like to go to gold right now. Gold right now is down, oops, now it's up. It's up 5 at 12.79. Whoa, look at that. Very interesting. We'll do the relationship between gold in leg D and the dollar. Let me go there very quickly. Dollar in leg D to the downside. Ho. We'll be back straight off this. Basil Chapman, Dow's up 65. Don't forget my webinar. We'll talk about that when I get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman will be giving a 2-series webinar Wednesday, August 22nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. So bond, you remember the dollar we were looking at least for a long time? We've been looking at the dollar in a huge arch formation. The dollar is the one, let's call it an index. This is the dollar index. It's the one index that seems to have a perpetual rhythm, and that rhythm is a cyclical one. And I don't know if I can show it here. I'll go to the monthly. Look at this monthly chart. If you look at the massive, and I say massive, from April of 1995, I always talk about this. I remember walking, I was going to meet my partner at the time. We were going to Fidelity for a meeting with some fund managers there. And as I'm walking along, I said to my partner, you know, I got a buy signal on the dollar. It was down in the 83s. Really? He said, yeah, anyway, we presented that to Fidelity. Well, that buy signal went from 83.03 to 121 round number high, July 2001. And then what happened was there was a V-shaped top and it came down. And I remember distinctly being on air in 2007 and saying, oh my goodness, the dollar is just taking out its left side, right side price time match. That was the one from April. And it's just taking it out. And I think we're going lower in the dollar. And the dollar then went down to 70.70 in, I think, February or March of 1998. The real low was 78.33. That was the major one. And that one was obviously also taken out. And then it had this little cycle of little h going to another h, like a lowercase h going to an m, then started to move to the upside. So when I'm talking cyclicality, I'm talking about the rhythm of going from lows to highs and highs to lows in the same number of bars to create an arch or a cup formation. And in this case, the dollar better hold this area at the 93.05 area, what was the low so far this week? 92.78. Why? Because 92.78 takes out the 93.02 first left side, right side price time match, and it's two bars late, 2 weeks late. And if it goes lower, 91.92 will be the next level of really must be considerable support. It has to be big support. Why? Because it has time to do that. It has all the way into the week of September the 8th. If it's going to be a left side, right side price time match to the peak G high that was made at the week of January the 6th, 2017 at 103.82. So that's what I'm going to be talking about tomorrow night in my webinar. Go to the front page of TFNN. It's going to be really interesting. Why? Because since 2010, the summer of 2010, when I identified, remember, we were lucky enough to go long the exact morning of the low, March the 6th for the Dow. March the 9th was the low in the S&P of 2009. And we held that position for a long time, maybe 18 months or something, because it would be great at 65.50 if we were still holding it. The diamonds is now at 219. Anyway, and what happened was in that particular cyclical low, after we ran up that summer, 2009, we had very smooth pullbacks. And then all of a sudden we had that pullback in 2010 that said, you know what, I'm not going to pull back very much at all. I'm going from the very strong sectors that were rallying to the very weakest so that I can rotate and thereby have a high level consolidation, not a crash or a smash or even a huge pullback, just a sideways move. So that's been going on now for 10, 11, 12, 13, 14, 15, 16, this is 17. So it is 7 years. 7 years, even this summer, we get in the rotation. My question, and I'm going to try to deal with that, of course, there's no real answer to that. You can only speculate. My impression is going to be that I can do that in my webinar tomorrow night, going for 2 weeks, because there's a second one coming up. Tim in Denver, how are you?
Good. How are you doing, Basil? What time is that webinar that
tomorrow
you're going to have?
5 o'clock tomorrow, Eastern Time, for an hour and a half. And then there's a second one, August the 16th, 5 o'clock for an hour and a half. And what's really important about the way I've set it up is I'm going to go through the structure of what I think is occurring in different sectors, what I think are the sectors that could hold, which are the sectors that should take a time out because they've been absolutely fantastic up until now. And then what's really important about this, I'm trying to select slowly but surely over the 2 week period. Every day in my newsletter, we'll be focusing on stocks that have the chance to hold very well, or stocks that I think are now done and they're going to be good shorts. So it's all coming up and it's going to be ready. And then what happens, the second webinar, I will be going through what's been successful, what hasn't been successful. I'll also be going through the chart formations that seem now to be working, because with the Dow at an all-time high, the S&P not yet making it, it's sort of failing. The QQQ's kind of failing. The SMH is kind of failing. We've got tremendous material now in which to say, hey, wait a minute. Up until now, the IBB, which is what you want to look at, which is the iShares NASDAQ Biotech ETF, has had a fantastic rally in percentage terms, going from 240 to 315. But that smash from 400 down to 240 was very severe. Are they not going to participate if there's a market pullback now, or will they participate? There are a number of rulings that are coming out, because that's the way the cycle's working in the biotech field, where stage 1, stage 2, stage 3, on all these different levels of permitting go through. And now we're finding that some stocks have some fantastic products, but they're not really moving the way they did when it was a speculation on it. And that's what I'm going to be discussing. What is going on? What's the difference between the retail and Amazon, and which retailers actually are doing quite nicely and could survive any pullbacks coming? So it's going to be quite exciting, both for me and I hope for my subscribers.
Is there going to be, if it's not possible to catch that, because we're a couple hours earlier than you are here in Colorado.
It'll all be archived. Yeah, it's archived. Everything's archived, and it's on your webpage for 30 days, or at least for 30 days to the end of my series. And you can go through it as many times as you want. You can send me questions. I love getting those questions and answering them. So it's going to be a very hands-on operation, because we're going to be trying to pick. We've already started picking what we're looking at for a short, what we're looking at for longs, what we're trying to short. So it's going to be quite exciting.
It'll be archived under your
under the opening call.
Great.
And
Great.
Chapman Wave. Yes. So
Great.
let me show you something now that's very interesting in the IBB. I missed out in my newsletter yesterday and today. I actually wanted very much to short the IBB, but I needed to see how that 9-period moving average acted either as support or resistance. So yesterday was a good opportunity because it went up above it and then it pulled back. Today I said, with the Dow potentially moving higher, IBB could move up, and in fact it's gone down 3 points. So this pattern is something really important, because I think it's a peak E in the weekly and it's a peak E now. I'm looking at it in the daily, and I think things are happening now that are very important. Can you hold on?
You bet.
Okay, we've got Tim in Denver. We're looking at IBB down 3 at 315. Dow's now up 67. S&P's only up 2. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. So we've got Tim online from Denver. We're looking at IBB. Look at this chart of Celgene. Makes a 139 round number high, peak F, pulls back, and is struggling to get back to that high of 139. So 134.72, leg D in the weekly chart. Technicals are still good in the weekly chart, so it's always the rudder of the shorter term that has to be pulling back the other one. So you have no position yet in the IBB?
No, I'm short, and I was kind of looking for 309 to 310. But I'm kind of bad at judgment on some of that stuff. But it seems like I always get out.
No, I think your eye's good. No, I think your eye is good. This, if I'm correct, now I'm going to do this. I did this the other day on what chart, and I can't remember what it is. I even saw it last night, and I said, oh, yes. I'm going to show this, the move that was to the high that was made on the 22nd of June to 323. I'm going to make this nice and thick in weight, and I'm going to make it in green. And you will see that the technicals were working very nicely going to the high of the 22nd of June. Then they started to deteriorate. Then the rally that occurred going to the high of last week, going to the 25th of July at 329.90. Let me just type that in. 329.90. That had way weaker technicals in the MACD. Stochastic was good, but it reversed very quickly underneath the 80% level. And that's suggesting to me that there's a problem now in this particular index, the ETF, and that this is the time that I think I could say to you, if you are short already. So the question is, I would say just be a little careful. You've got to be prepared for it. But if there's a bounce and it goes over the high that was made on the 31st of 322.54, just watch it closely. I don't think it's going to go much higher than that if it does bounce. But most importantly, I think your eye is good because 312 is the next support, and it's a 316.07. But if that goes, then you're looking at the low that was made on the 10th of July at 308.49. So your 309s, that I'm with you. That would be a target. And on the way, there might be a little bit of a bounce. But at this point, because of this cup formation that is failing, I'm suggesting to you that there's going to be lower highs and lower lows. And the most important thing is, how does the IBB handle the 310 to the 308 area if and when it gets there? Why? Because that'll be the first time it's under the 9-period moving average in the weekly chart, which is 312, and it'll be decidedly into this candle, the big candle of the week of June the 23rd, that starts off at 293 and goes to 323. So you want to get into the body of that candle, somewhere in that 308 area, and then all of a sudden you're looking at something where the technicals could start to deteriorate. At this point, the reason why I say there could be a little bit of a bounce is that the weekly technicals are still quite good. So if this move down today continues for 3 days, that's how you're going to see the weekly technicals start to deteriorate. So right now, there's just enough strength in the weeklies to say, be careful, there could be a bounce. I'm calling it a bounce for now. I don't think it's, the way it's looking technically, I think that the IBB has made at least a short to maybe even intermediate term top at 329.90. And so I think you're in absolutely the right position to be short.
Thanks, Basil. Appreciate it.
Thank you very much for calling. Always appreciate it with good questions. Thank you, Tim. Tim in Denver, we're looking at the IBB. So now let's go to a couple of things. I was asked earlier, would I look at Berkshire Hathaway? Well, Berkshire Hathaway, of course, this is Buffett's baby, is trading at 175.27. We just missed going long this recently, and I just didn't get back. I thought about it, but I wasn't 100% sure because this is Mr. America. I mean, Berkshire Hathaway is insurance, banks. It's in almost everything. It has the fantastic furniture company from here in Massachusetts, the two brothers that sold out about 10, 12 years ago, whatever. Well, time flies. Maybe it's more. They're in everything. And Berkshire Hathaway is called the financial. It's in the XLF, in the S&P financials. So you've got to consider it that is, as I say, it's the American economy right there in one nutshell. And it's trading at a recovery high. The all-time high was 177.86. This is the B shares, made the week of 3rd of March 2017, had a beautiful cup formation. The MACD's improved. It's not anywhere close to where it was back at that high in March. And the stochastic also isn't there, but it's at 87%, and that's good. So I'm looking at this and I'm saying, Berkshire Hathaway, and I'll be talking about this in my webinar tomorrow night, is one of those stocks that in a way you want to be able to do what Buffett does. You want to buy it and close your eyes and say, that's it. And you want to be buying it anytime, because if it's your belief that where the economy goes, Berkshire Hathaway is going to go. And since Buffett's one of the genius of all buyers of companies, in other words, there are many portfolio managers that have the stocks as their baby. No, Berkshire Hathaway has the companies and the stocks, and that makes a huge, huge difference. Not only that, as someone just reminded me, he's sitting on just a little bit of cash. I mean, he's got pocket change there to the tune of 90 billion. So I'm looking at this and I'm saying, I think Berkshire Hathaway on the shorter term is overbought at 175. Could it pull back if there's a market pullback of 8% maybe? Could it pull back 8%? Could it go to 168s, 166s? Well, if you have an outlook, and if you're looking at monthly charts, I'll go through this in greater detail, of the monthly upside target line, which really points to the 200 area. Then you say, I'm prepared to sit and have a bit of a pullback at any stage. So here's my outlook. There's a cup formation. Berkshire Hathaway is getting really close to resistance in the 170. It's in 175 right now, in the 177s, 2 points higher. I think it's 2 points higher and 5 points lower over the next month, maybe next 6 weeks. I'm completely wrong if Berkshire Hathaway on the 16th of August, 17th of August, 16th is when we do the second webinar, is trading at 178 to 182. Then I have to say, you know what? It ain't going to pull back. It's just going to keep going up. I think it is. So I'm looking at it and I'm saying, okay, it could consolidate at least 4 points. And it reports sometime this week. It reports Thursday. Okay, it reports Thursday. That's going to be very important because I suspect, I don't see any reason why it shouldn't be a good report. If that report is good and it pops up 5 or 6 points, then that would say, you know what, it's now raised the base of support, and it could come back to the 173 level with the 9-period moving averages in the daily, 171 in the weekly chart. But in the meantime, I do think it's going to go to a leg E in the near future, which would be above 177.86, the high that was made in March. Leg D in the monthly chart, right up into the Chapman wave inside track repellent sell zone. But the next time it goes there, that's up at 181. So as it stands right now, yes, I think it's a fantastic company. If you're at all thinking of buying it, you could even nibble at it right here at 175, saying, hey, this is not my real position. My real position is in the low 170s, maybe even the high 160s. But just getting my foot in the door, I don't have a problem with that right now, appreciating that it's somewhat overbought just on the shorter term. I'll be back. Basil Chapman, Dow's up 77, S&P's up 3. Got a lot of questions to go through.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I was asked about the OEX. This is the S&P 100 index. Most people don't even look at this, but some of us have been in the business a long time. We just follow it regularly. And it is in leg D, peak D in the daily, leg D in the weekly, and a leg D in the monthly. So at this particular point, I'm looking at it and I'm saying, gee, it's really struggling to make an all-time high. You can't have just a select 30 stocks, and it's actually very few in the 30 that are acting so well, without having the New York, the 100, and then the New York Stock Exchange, the very broad is the 2000 stock index recycled. So let me just see. So I have to do the ABCD, and it's called this ABCDEFG. Yeah, so that's gone to a new all-time high today. The New York Stock Exchange. The MACD is good. Stochastics at 90%. So far, it hasn't given a signal. I don't want to do this quickly because it's got an alternate count. EF, it could be a G. Right now, it's either a G or it started over again, and that would be, or a D. So it's in one of those letters that says, hey, from here, you've got to be a little bit careful. The MACD hasn't really turned down, and the 9-period moving average is still rallying. So it would have to take some kind of a surprise to really knock this down. And that's very important because you got your Dow 30 and you got your New York Stock Exchange 2000 acting pretty darn well. So this is what I'm saying. Within the context of what happened last week with that VIX index, and one of the reasons why we haven't gone heavily short is that VIX index last week had a spiral to the 11.50 area from the 8.84. That was as if the Dow and the S&P had really just crashed. The Dow should have been down between 450 and 550 points over those 2 days. The S&P should have been down, 60 or so. And that said to me that was like a false move. It showed that people got too fearful too quickly because there was that news, you remember, whatever it was, on the Thursday and then again on Friday. And that gave you enough strength to say, well, now you've got to be a little careful because there could be some residual strength. How will that residual strength play out? All of a sudden, the VIX is holding at 10.23. It's down 3 cents, with the Dow up 80 and the S&P up 3.5. Something's here. Something in this picture says, there are people buying insurance. Before they ignored the insurance, and now they're buying the insurance. But I don't care. I'm treating it only as a number. And I use it not as Richard Arms had developed the volatility index. I'm sorry, the short-term trading index in a particular way and I use it a particular way, the same thing with the VIX. I use it in a particular way. Yes, fear and greed. Actually, the only time I think it's really those nomenclatures are applicable is when it spirals up, as it did when it went to 15.16 with the Trump healthcare scare, or whatever it was, back on the 29th of June, and then the sudden fear factor with the administration at 11.50 on the 27th, last Thursday. And then it's fear because people they're scared. What's going on with the market? Let's buy some insurance. But if the volatility index, I'm changing my numbers slightly, goes to 11.75 to 12.10 in the next week, and then holds quite high, that's going to be a sign to say, okay, now the market can start to not just pull back, but to sustain a pullback. Now, one day pullback doesn't mean a thing. Okay, so that's there. I was asked about the TLT and that. Look, the TLT is having a good move up 26 at 124.31. We've seen this picture before. If I go to the, this is going to cover a bunch of questions. If I go to my long-term bond yield, triple bond yield chart, which I show subscribers every week, bonds are here. The 30-year in white is down 29 cents at 28.69. The TNX, the 10-year, is down 26 at 22.66, and the 5-year light blue. Oops, I'm sorry, I said the same thing. The 20. Where is that? Yeah, it's at 22.67. Down 25 cents. That's the 10-year, and the 5-year is right now down at 18.13. It is down 19 cents. And all I'm saying is that that bond yields are in a trading band, and we discussed this now for weeks. I've been saying I think it's trapped between the 30 and 32s, probably 31.50 really, and the low that was made at 26.82. That's 2.682 the week of the 30th of June. So it's just kind of trapped there for now. But my thinking, and that's different, my thinking and the actual price is sometimes two different things. My thinking is that the TLT is going to rally a little bit, and if the market starts to really pull back in unison, but you have to have the Dow pulling back. It's got to not go to the 22,020s, but it's got to go to the 21,860s, 21,820s within a few days. If that happens, I think you're going to see bond yields start to pull back as TLT pushes higher. That's the question I was asked. And my answer is, I really want to see 125.50 to 125.70 in TLT to say, aha, change in trend. Is the general market pulling back at the same time? Why? Because I think if you get that kind of a spike in the bond yields, in bonds, a pull back in the bond yields, money will come out of the safety of, out of the equity market and go into the safety of bonds. Kind of that's my thinking. Now, I didn't get a chance to do this. Let's go right away. I'm going to put up the 120-minute chart. Look at this. This answers a bunch of questions coming up. Here we go. Here we go. So we're looking at the dollar, DXY. The dollar at this particular point is up 21 cents at 93.06. In a leg, D to the downside. Stochastic is horrible at 88%. It's flat. It needs to get to the double digits for this dollar to be able to rally strongly, to get to the 93.67 9-period moving average, and then to go to 94.07, the next resistance. And that would mean the MACD has to turn positive, but the histogram is starting to improve in the daily. The monthly chart, the weekly chart, we discussed that whole thing about the left side, right side price time match, and so far it's gone a little bit below the nearest term support level of 93.02. It's gone below that left side low, which leaves it open to this trend line, Chapman wave. It's called inside wedge support line. And there it is. And that inside wedge support line is touching it right now. Can it bounce off that? We'll see. Okay, so that's the dollar. But in the meantime, there is enough evidence to say that gold, I'm trying to get a relationship here, weekly chart had a very nice bounce. It's so close to the 200-period exponential moving average in the weekly of 1284 that's going to be the big kicker. Can it get to 1284? Now, it's in a leg D, but the MACD is strong. Stochastic's at 93%. This is the exact opposite. Remember, 93%, and we just looked at the stochastic in the daily chart of the dollar at 8%. So there's your relationship. So let's make it simple. There's no sign yet in gold up $5 that it wants to be pulling back, but it is in leg D. It has a left side, right side price time match in a V-shaped formation that targets the left side highs of the 14th and actually the candle of the 9th, but really it's the 14th at 1290.4. Can it get there in this time frame that says it should get there by August the 8th? I'm going to talk about that in a moment. We'll be back for the final segment. Please consider my webinar coming up tomorrow night. Which sectors are going to be working in the next few months? Which will be pulling back? I'll talk about that when I get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Basil Chapman, we're back. Dow's up 81, just relentless. Now the S&P's up 4.5. Good move. We're going to go to John in Philly. John, how are you?
Basil, I'm very good. Thank you for all you do. I wanted to put to you one last question before the end of your show on the Dow Jones. I fully understand attempting to top pick any very strongly trending uptrend market like the Dow Jones 30 is fraught with danger and chances for failure. But I share this observation. Since those April lows on the Dow Jones daily chart, we have a powerful tool that I learned from Tommy DeMark 30 years ago. His sequential system will give a sequential cell signal, not confirmed, but sequential cell signal today on any close that's flat to higher. So I just share that. It's just an observation. That really doesn't tell us much. So I ask you the question, is there anything that you can see in your chart work on the Dow that might suggest there's a decent chance for a turning point high on the short term coming up here?
Yes, there are a couple of things that I'm looking at. But what you have to keep in mind is that the sector rotation has been an incredible, in fact, sector rotation has had almost like a climax over the last 3 weeks, where we've seen unbelievable divergences that would normally, I'm going to answer a couple of questions at the same time now that I got. So if you look at the IYT plunging today again, down at 164, made a top recently at 175, down at 10 points. This is very unusual action in the IYT. And if you use Dow theory, we are not getting a confirmation of the Dow high. Number one, if you look at the volatility index, it made a new all-time low. That corresponds, yes, very nicely with the all-time high. But that sudden move up on Thursday might have usurped some of the energy of fear by spiking that high. And now you have to kind of come down towards the 9s, maybe even the 8s, before you can get a much stronger move to the upside. But now this is what I'm looking at here. In my work, it's a leg D. You've had 2 gaps. You've actually had 3 gaps since the 24th of July. You can go back and hardly ever find 3 gaps like this. You can find them, but it's usually from lows, not going to all-time highs. Hardly ever can you find it going to all-time highs. On the one hand, that's very bullish because it's saying, hey, people are prepared to buy the breakouts to the upside. On the other hand, it says, oops, technically, that's just not a good sign because it's being done with very, very little veracity. You've only got you've got Boeing and you've got a couple of others that are really doing all the work. So this is what I'm looking at. There are 2 outcomes here. One is that if we go to 22,020s or higher, I have to say, you know what, we've got a high-level consolidation. There's just going to be a rectangle formation. The whole 21,000s is going to be tremendous support. Don't worry. The other is a V-shape, inverted V-shape pattern. That says in the next 2 days, if there's a break below 21,690, under 21,700, let's say, a close, then you could have the inverted V, that's that Eiffel Tower pattern, but you need to see the MACD, which is strong right now, go negative. That's going to take at least 200 points or more, and you have to see the stochastic pull back from 96%, has to have a sharp dip towards the 85%. So those are the criteria that I'd be looking at short term. But to answer your question, other than the wave count, everything is positive, and it's when everything is positive, you've got to start looking to see what could happen on the other side.
Thanks so much for that input, Basil. I do appreciate it, sir.
Thank you very much for calling, John. Always appreciate your call. So, folks, check out my webinar coming up. I think it's timely. It's going to be really timely for some of the sectors because I think they're rolling over, and we'll be able to look at by tomorrow. We'll have 2 full days of August trading. We'll be able to look at the candles. I'll be back tomorrow. Have a great day. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.